Hello everyone, and thanks for listening to our Brick and Road Report presentation. Today my equity research team will provide an in-depth analysis of Pool Corporation. My name is Owen Fosnacht, and my group members are Ashley Hemel, Antonio Carboni, Andrew Greenbaum, and Anna Smith. Pool Corp's former president and CEO, Frank St. Romain, founded South Central Pool Supply in 1980 as a regional distributor of pool supplies. The name was changed to SCP Pool Corp in 1993, had its IPO in 1995, and adopted the current name of Pool Corp in 2006. Pool Corp is the dominant company in the pool supply industry, especially through acquisitions of subsidiaries whose distribution centers or product mixes allow Pool Corp to vastly expand their markets domestically and internationally. Pool Corp started out as a pool supply distributor. Now, Pool is essentially a complete backyard company that offers products in pool, deck, and landscaping areas. As you can see, Pool's revenue stream is very well diversified. Pool Corp's revenue comes from pool supply, repair, and cleaning products. In addition, they cover pool, deck construction, equipment, and repair. The green side of Pool's business, irrigation and landscaping, only represents 8% of revenue but is poised to grow in the coming years. We gave Pool Corp a market perform rating and project a 12-month target price of $31.59. We used discounted cash flow, price to earnings, EV/EBITDA, and price to book as valuation methods. 70% of Pool's revenue is non-discretionary, as customers need to maintain their pools to keep them usable. The maintenance and repairs division is maintaining steady revenue growth. However, the growth rates have been slowed by the lack of new pool construction, which has a strong correlation to new home construction. Pool stock price has steadily recovered from the recession thanks to strong management, a distribution unrivaled by any competitor, and the non-discretionary repairs that pool owners must make. A jump in earnings growth will come from a housing recovery, an increase in new home construction, and new pool construction in addition to the non-discretionary revenue.
Pool Corp's peer group is not clearly defined because no other company in the pool industry does what Pool does on such a large scale. We selected peers based on the following similarities. First, we considered market cap. Next, we chose companies that participate in wholesale distribution within their industry. They link manufacturers to retailers in highly fragmented markets and are some of the largest competitors in their industries at the national level. Third, we chose companies that try to carry a broad range of products in order to position themselves as a one-stop shop for their customers. Finally, we chose companies whose business strategies include growth through acquisitions, including expansion into international markets. Here are the companies that we selected as Pool's peers. Watsco Inc. is in the heating, air conditioning, and refrigeration industry. Wesco International is in the industrial supplies industry, and United Stationers Inc. is in the business products industry. We compared several analytical measures and found that Pool's numbers were slightly different than its peers because it operates on a larger scale than they do. Most notably, Pool's debt-to-equity ratio is higher than its peers at 101%, indicating that Pool is more aggressive about financing growth with debt. Pool's ROE is also somewhat higher than its peers, suggesting that Pool is more profitable.
Pool's current stock price is $28.45. We estimate the target price to be $31.59. To arrive at our target price, we used 4 different valuation methods. We found that relative valuations were often flawed because they value Pool based on its smaller peers. We found that the DCF was the most accurate method because it captures Pool's strategy of growing through acquisitions. To value Pool using the DCF method, we needed to make a few key assumptions. First, that the seasonality of the industry would not change, and that it would continue to be a major factor despite Pool's expansion into the landscaping industry. Second, we assume that Pool will continue to expand by acquiring new businesses, and we have forecasted its rate of expansion based on management guidance and historical rates of acquisitions. Finally, we assume Pool will execute share-based compensation plans and continue to repurchase its own stock when they believe it can be acquired at a discount.
In April of 2010, Pool Corp acquired Les Produits de Piscine Metronaux Incorporated, a Canadian pool supply distributor. In December of 2010, Pool Corp acquired Turf Equipment Supply Company, a Las Vegas-based landscaping product distributor, and Pool Boat and Leisure SA, a Belgian pool supply distributor, further expanding the company's hold in the European market. In May of 2011, Pool Corp acquired the Kilpatrick Company, a Florida-based landscaping and irrigation company that supplies golf courses and landscapers in Latin America and the Caribbean. In October 2011, Pool Corp acquired a new credit facility. This unsecured credit facility expands the company's revolver from $240 million to $430 million. It matures in 5 years and will be used to pay down $100 million in debt maturing February of 2012. The recent economic downturn resulted in consumers deferring purchases for pool maintenance and retrofitting. As consumer confidence and spending increase, Pool Corp can expect increases in sales of these categories. Recovered sales for deferred spending could represent over $500 million in recovered revenues. The green side of Pool Corp's business accounts for only 8% of the company's revenue. Landscaping and irrigation sales strongly correlate with new family home sales and new construction. When markets rebound, irrigation and landscaping revenues will increase rapidly. Recent irrigation and landscaping acquisitions have already increased Pool Corp's market share in that business. Using growth through acquisitions, Pool Corp continues to dominate the pool supply distribution industry. Pool Corp currently operates 291 sales centers, the same amount as the next 42 competitors combined. Pool Corp continues to look for opportunities to expand through acquiring smaller pool supply distributors. Pool Corp generally spends $10 to $20 million of cash on acquisitions per year. Pool Corp plans to return 70 to 80% of cash flows to investors through share repurchases and dividends. In May 2011, the Board of Directors authorized a $100 million share repurchase program. About $80 million of this program is still available. The new credit facility Pool Corp recently was introduced to greatly strengthens their financial position. The new credit facility of $430 million replaces the $240 million revolver and will be used to pay down $100 million of debt. These actions will lower the future cost of borrowing and could enable Pool Corp to make an acquisition or repurchase shares in the near future.
On September 30th, 2011, all 5 members of our team arrived promptly at 8:30 a.m. dressed in our best suits. We set off for our long-awaited meeting with Craig Hubbard, the Investor Relations Officer of Pool Corp. After about an hour, we arrived in Covington, Louisiana, where Pool Corp's headquarters are located. We were greeted by Craig Hubbard and directed into a conference room where we were handed copies of Pool Corp's Investor Relations packet, as well as a CD from Pool Corp's Investor Day presentation. Mr. Hubbard began his presentation, which covered topics on Pool Corp's blue and green product lines, its customers, its historical growth trends, and the industry as a whole. Mr. Hubbard was happy to entertain our questions, which allowed us to gather a deep understanding of Pool Corp's unique culture, business strategies, and plans for long-term growth. That concludes our presentation. On behalf of the Pool Corporation analyst team here at Burke & Road Reports, we would like to thank you for watching this video.